Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. Oil dominated the headlines this week, with prices continuing to fall and energy stocks suffering. On Monday, markets were down modestly after profit-taking from last week's record-setting run-up. On Tuesday, markets initially declined sharply after bad news from both China and Greece. China tightened collateral requirements for some loans, prompting a massive stock sell-off, and Greece was facing political challenges that could disrupt its bailout by the European Union. However, by Tuesday afternoon, market losses were mostly eliminated. On Wednesday, OPEC cut its worldwide forecast for crude oil demand, and oil tumbled to a 5-year low as OPEC made no plans to cut production. On Thursday, retail sales for November came in up 0.7% month-to-month and higher than expected. Analysts are attributing the strength in part to lower prices at the gas pump. Oil continued sliding down and dropped below $60 a barrel for the first time since 2009. Jobless claims for the week ending December 6th were 3,000 lower, 294,000, about even with expectations. Markets ended the day up modestly. On Friday, the producer price index for November showed a 0.2% decline, falling a little further than expectations, and crude oil also continued its slide. Markets were down sharply at the opening. Now let's take a look at some stocks. Sony Corporation shares dropped sharply since Monday's opening after it was announced that the Japanese electronics manufacturer had experienced yet another cyber attack. The security breach caused disruptions to the PlayStation throughout the prior weekend and caused Sony's PlayStation Store to go offline until Monday. BP share prices continue to fall steeply along with the decline in oil prices. As a result, the British oil company will implement a $1 billion restructuring program. The company announced on Wednesday thousands of job cuts across the spectrum of its oil and gas business, expected to begin during the fourth quarter of 2014. Morgan Stanley on Wednesday was fined $4 million by U.S. regulators for not having the required risk management controls that would have prevented the unauthorized buying of Apple shares by Rochdale Securities, one of Morgan Stanley's trading firms. This led to a $5.3 million loss, forcing the firm to shut down that business. Shares of Staples and Office Depot surged on Thursday after hedge fund Starboard Value increased their stake in Office Depot to 10%, while also buying a 6% stake in Staples, with hopes of sparking a possible merger between the two office supplies giants. Microsoft announced that they have partnered with digital currency payment processor BitPay to begin accepting Bitcoins as a form of payment through a Microsoft account. The company also announced that they will be acquiring developer testing and analytics platform HockeyApp, following the likes of Twitter and Google. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.